Yeah, good day, guys. Good day, guys. Welcome back to my YouTube channel once again. So today it's a very lovely day. I can see my crew, my team is really doing well. They are doing really well. So a lot of things are going on the ground, like I said. This year, before this year ends, is going to be a very great and beautiful year end for us. Yes, it's going to be very beautiful for us, very beautiful for us. So at the end of the day, we pray that 2025 will be a bigger and a more beautiful year for us. So please, I just want you to pay very good attention to what to these videos, to videos I'll be uploading. Like I said, if this is your first time, please do well to subscribe. Don't watch and just pass by. And you that is watching, make sure you watch this any of my video till the very end, because the best is always reserved till the end of the video. Please make sure you share it also. Do well to click the like button and activate the notification bell also, so that whenever I upload any video, you get to be the first to see it first. So please, let's quickly delve into what it is. Today, what I'm going to be sharing with you, it's an idea, a lifelong idea. As it is said, that learning takes place from birth till death. All right, learning is a progressive thing. As you grow in life, you tend to learn new things. Learning never stops. It stops only when one stops breathing. So, as food is important to the body, so also knowledge is important for one's growth, for one's development, for one's advancement in life. Very important. So, whenever you see an opportunity to gain knowledge, please do well to pay attention. Because the truth of the matter, or one thing you have to understand in life is that knowledge seeking doesn't come from one source. It comes from different sources. So it is the accumulation of this knowledge from different sources and the application of this knowledge is what makes you a wise man. So right now, the knowledge I'm going to be sharing with us is, as you can see in the thumbnail, trading as a fresh graduate from college. Okay, if you're just graduating, I guess it's a very good thing for you that you are watching this very video today. And also, you have made a very beautiful decision to come into the trading industry. Because there are many opportunities as far as this industry is concerned. There are so many opportunities. Many opportunities. You can become just a marketer in the industry. You can become a technical analyst. Your own is just to be providing signals. If you don't want to trade, you can also become a trader as well. If you don't want to trade with your own fund, there are pro firm accounts. There are pro firms that you can buy the accounts and trade with them. You know, this industry is getting so advanced that it's getting to the point whereby you don't even need your fund anymore. Like what my mentor used to say, Dr. Willis. In fact, it has been going on and on in the social media recently that he's one of the biggest forex trader currently in Nigeria and also in Africa, because the guy worth recently his net worth was declared to be about $300 million. Yes, $300 million. That's huge, really huge. It was not a day job, guys. It wasn't a day job. Dr. Willis is a guy that I respect so much. I respect his wisdom, his knowledge, and I respect Dr. Willis as a big time trader, as a big time technical and naked trader. Yes, that's how I see him. He doesn't use indicators. He doesn't use robots. Whatever it is that you want to mention, he's a complete technical trader, a top-down analyst. So I've watched several of his videos. I've been following him for a very long time. I've watched. In fact, there is no video he wants to do that I don't really watch. There is no one he uploads I don't watch up till today. Up till today, I still follow him on Instagram. Not until my Instagram was actually deactivated recently. So the thing is, you need to have someone you're listening to. You need to have someone that thinks the way you think, that you can reason along with, that you can share the same view. Thank God you're just graduating. If you're about to graduate, thank God you are about to graduate, and you're watching this video today. The earlier you gain experiences, the better. The earlier you start a particular thing you intend to do, the better for you. Why? Because you tend to gain more experience before you attain a certain age. You would have gained all the experience you need to gain. You would have made all the losses you need to make. Then you would have gained all the knowledge you need to make. So that when it's time for you to start using those knowledge, you would have gathered a lot. You would have gathered a lot of ideas. You understand? So as it is, guys, just thank God you're watching this video. Do well to subscribe if this is your first time of coming across my video, and also share this video and like, and make sure you activate the notification bell so that whenever I upload any video you get to see it on time. Okay, so now as we are in this video now and you are watching, so what I have for you today is just a couple of ideas. Then before we delve into the charts or the analysis that I have for us today. Today is Friday, 22nd of November 2024. So the month of November is running to an end. December is coming, which is the month of volatility, as it is known for. Some people used to say that it's not good to trade during December period and blah blah blah. It is true, because the volatility in December period, that festive period, is usually very, very much. But over time, I have been trading December. Yes, I have been trading December. I don't really have time. When it's only when you have made it in this industry, that's when you can say, okay, this month of December, I don't want to trade. I want to spend time with my family. I want to go on vacation. But when you are just coming up, guys, every month is your month. When you're just coming up, trying to make headway in the industry, every month is your month. You always want to trade. You always want to trade, always. So right now, before I delve into the chart, I just want to give us some couple of ideas and advice. Yes, some couple of ideas and advice. Like I always say, it's very difficult. It's very difficult, but it's a must. Difficult, but it's a must. The fear of not losing at all. The fear of not wanting to lose is part of the problem that newbie traders have. The fear of not losing at all is part of the problem that newbie traders have, that is making them unprofitable. You would have analyzed the charts, the long-term trade or the long-term opportunity into the future, 1,000, 2,000 pips. Like we have said earlier on, that this market, if it moves from here, we took some trades from here to this very point. Yes, from here to this very point, we backed some money there. Then we expected the market to come back down. All right, we expected the market to come back down, but unfortunately it didn't. Now look at it. We have made some entries from here now to this place. It has come to, it's about 1,300 pips. Now we are expecting it to come all the way back to this up, which is 2,100 pips. 2,100 pips, guys. It's not a joke. It's not a joke. So even if you had decided earlier on to just use 0.01 lot, 0.01 lot from here, and you decided to leave it up till this place that the market is heading towards, you'll be getting $210 just by not clicking and closing and opening and doing that and doing whatever it is. You just open and just leave it, because top-down analysis have told you where the market is heading to. That's the power of technical analysis. The fear of not losing at all is what is killing newbie traders. Let's assume from here you enter this trade from here, then you now decided to risk this $42 for this move. When you risk 42 for 200, it's not too big. Your risk is not too big, and you are sure, you believe. And funny enough, my strategy said, in fact, in my strategy, you can't even risk up to that. When you are using my strategy, you can't even risk up to that. When you are using my entry strategy, you can't even risk up to that at all. You can't. Why would you risk up to that? You can't risk up to that. You can't. When you're using my strategy, you can't risk up to that. Okay, let's assume you make your entry somewhere here. Let's assume that your entry was made here. This is where your stop loss will be. Your stop loss will be here. So now that your stop loss is here now, that means you'll be risking $17. $17 to where the market is currently is $139 if you are using 0.01 lot. risking 17 for this $139. It's huge. It's huge, guys. It's huge, guys. That's I can't even calculate the reward compared to the risk that you are making, that you would make. Now, looking at what is happening in the market, everybody would think, like what I said the other time in my previous video. I said this market was going to pull back to this place. That was what I said, that it was going to pull back to this place. Then, if it's able to sustain here, then it will head back to this place. But unfortunately, due to Donald Trump win, the market had to come back down to this region. Why? Because dollar gained some strength as at that very week. That's why the price had to drop a bit. Then eventually, okay, we expected a pullback into this region. Now, when it gets here, if it's going to continue down, then it will have to change trend from here, then to come back to this region. But unfortunately, no, it didn't. Then it decided to continue to the upside. I was telling some people the other day that when market breaks a trend line like this, it doesn't mean the trend has changed. Something has to happen. Trend line is just a line. It's just a line. It's not. Trend line is not your major resistance. It's not your major support. So your major support and your major resistance are very critical. And how the market is able to sustain and hold those major resistance and support is what matters as a technical trader. Trend line is just one of the tools that you would use, just as how I've used it. Okay, I've already know, since I've already have two touches, one touch, two touch, I've already know this market is an uptrend. That's what trend line is meant for, to indicate to you the trend of a particular pair. That's the usefulness of trend line. It doesn't mean when sometimes the trend line could be broken, but it doesn't mean the trend has changed. No. I used to feel earlier before now that when a trend line is broken, then that means the trend has changed. No, it doesn't work like that, guys. It doesn't work like that. As I've said, I've listened to my mentor severally. Dr. Willis is a big time forex trader and a Nigerian who currently based in Dubai, once based in the UK, in London. So right now, I've been watching his video before I started trading, and after I've been trading, and up till now, I am still watching his videos. I'm still following him because our idea, our way of thinking resonates. His strategy resonates with my passion for trading. I've always envisaged to be able to see the market from a bigger perspective, because I know that as this market is moving, there are people who are moving this market. I found out they are the big time traders, the institutional traders, the big time investors. They are the ones that move the market like this. The market doesn't just move. It is how much of investment that is put into a particular pair that moves the market, and how much of investment that you pull out of the market that moves the market. In one of the videos that I've watched by Adam Cole, he said that it takes 100,000 of I don't know whether 100,000 of dollars, yes, to be able to move the market by just one peep. It takes 100,000 of dollars of trade position. 100,000. Oh my goodness, 100,000 of dollars position to move a peep in the market. So you can imagine how much of investment it will take, of trade that it will take for the market to move from here to this very place. So guys, trading it's a real deal. It's a real deal. And also, having mentioned the fear of not wanting to lose as part of what is killing newbie traders, I also have another thing for you. And what is that thing? You want to use your little money, your small account size to make huge money. You want to turn $100 account, a $50 account, a $30 account, to $100 account, to $1,000 account, to $2,000 account. All that. As a newbie trader, guys, it will help you. It won't help you. You want to turn $100 account to a $100,000 account. It's possible, though. It's possible, but you will know how many number of failures that would have taken place before that target will be met. But as a newbie trader, can you sustain it? The answer is a big no. But the guys who have been in the industry, who have been making money, can afford to risk that $100 at a sitting. When I was watching Dr. Willie, Jeffrey Benson, in one of his videos, he turned a $100 account to thousands of dollars at a sitting. In that particular trade, he opened about 100 trades, hundreds of trades, 100 positions, 100 positions at a sitting. So when the trade eventually went his way, you could imagine how much he was able to make. 100 positions. Just imagine everything was just 0.01, 0.01, and you open it like that. 100 positions. With 100 pips, 100 positions, that would be how much? 100 pips, 200 pips, 100 positions of 0.01. That would be how much? So, guys, we it's important that we try to understand this thing better. Like you can't turn your $10 account, your $30 account to a huge amount. It's not possible, guys. So I want you to think in percentage. Think in percentage. The day you start reasoning in percentage, that day things will start falling in place for you. That day things will start falling in place for you. Now, someone who has a $1,000 account decides to tell himself that, okay, every month I want to be making 10% of this $1,000 account. I'm sorry. Okay, decides to tell himself I want to be making 1% of this $1,000 account on monthly basis or daily basis. It depends on how you want it. Let's assume on monthly basis. You decide, you tell yourself that on monthly basis I want to be making 1% of this $1,000 account. 1% of $1,000 account is $10. It's $10. Another person who has a $10,000 account decides to be making the same 1% of that $10,000 account. That will be how much? 1,000. Am I correct? $10,000. Yes. You understand? So if the person who owns $1 million account decides to be making 1%, that 1% is $10,000. So you are not the same. You are not the same, guys. You are not the same. You're not. You're not the same. You're not. So, guys, just try as much as possible to stay calm. Try as much as possible to understand yourself better. Then, having as a trader too, as a newbie trader, there is also that fear when the market enters into a consolidation. You have analyzed the market into the future, right? You've analyzed the number of pips. These things I am saying, they are just words, okay? But it's difficult to implement. Even me as a person, sometimes I find it difficult. It gives me headache because nobody will be happy when market is ranging around his stop loss or where his entry is. Nobody is always happy to see that. That's why some people like my mentor, like always, once he opens a trade, he doesn't check it. Even if he wants to, maybe once in a day or maybe once every 2 days or 3 days to see how the market is doing. So when market enters into a range as a newbie trader, you tend to close out on time. And by the time you close, the market now start heading your direction. Then you would want to make a hash entry. By the time you make that hash entry, at the end of the day, you just end up burning yourself. You end up burning your fingers. So guys, just stay with these 3 tips I have given. Just make sure you adhere to it. Stay glued to your principle, your entry principle. Don't joke with it. Once you see your market setup, as I always say, don't think about it. Don't reason too much. You don't have to start thinking, would I be right? Would I be wrong? No, just make your entry. Make your entry. Some people will say, also, cut short your losses. Yes, your losses. Once the market is going against you, see it's heading towards your stop loss. Cut it. Cut it. It's only when you know that what you are risking is not really too much, and even if it goes, it won't really affect you like that emotionally or psychologically. You can leave it. You understand? So as I speak to you now, my guys are really doing well. As I said, my guys are doing well, so they are adhering strictly. Like I said earlier, now, so now we'll be delving into the charts now to see what we have been doing so far and how we intend to go about it. All right. Okay. Now, looking at what is happening in the market, we already know that the market on a long scale is an uptrend, right? It's an uptrend. It has been going up for a very long time. The trade has been going up for a very long, very, very long time, guys. Very long time. So right now, as we speak, I will be delving into the charts to explain to you what the market is doing and how we have been trading this very market. Okay, now listen, guys. This is it. This is a downtrend, right? High, low, high, low, high, low. So we expected the market to come back to come give this. When the market took off from here, we expected it to come here, to come settle here, then head back here, stop, sustain, either continue back to the upside or continue down. I knew when I told myself that until this place is taken out, I won't be so confident in a downtrend market. Until this place is taken out, I won't be so confident. So when we were taking this thing upward, like when we were following it, I made some entries here. Some entries were made here. I remember sending the signal then to. I uploaded the video of this entry. We made the entry here. Entry was made somewhere here. Yes, somewhere here before the market went into a range of that day. So we closed out the trade here. Then we made another one here. Then we close out the trade here. So we expected the market to come all the way to this place. Then when it gets here, that we're going to make a 4-hour change of trend, then we'll buy. We'll start selling from here to this very place. But unfortunately, the market didn't break out to the downside. All right. So because it didn't break out to the downside, what did we do? It was very simple. Because our mind was still up. We still believe that the market was still going up. All right. We still believe that the market was still going up. So eventually, when it started this way, what did we do? It was very simple. What we did was very, very simple. The break of this trend, the break of this stop, a break of this stop is what people call break and retests. Or call break and retest. Guys, so we talk about break and retest. You first of all need to understand. You first of all need to understand the direction of the market. It's important that you first of all need to understand the direction of the market before you carry out any strategy on break and retest. Okay? It's important. Let's top-down analysis tell you where the direction of the market is going before you start doing your break and retest. Otherwise, you break and retest and the market will go and retest your stop loss. You break and retest and the market will go and retest your stop losses. You understand? So make sure you have the bigger picture of what the market is doing. Then from there, you'll be able to make a very good break and retest whatever strategy. Okay. Now as we head further. As we head further now, so this is it, guys. This was where we made our entry. We made our entry from here. I made two position entry here, 2 positions here. Right from here, I close out. Let me use this ruler. I made some entries here, 2 positions. I close one of the 2 positions here. Then I made another one here. This one kept running. The one I entered here kept running. Then I made another one from here, another position from here. I took it out from this place. All right. Then when I took it out from here, I made another entry from this place. Then I took it out from here. That trade was closed out from here. Then the one I entered here, I finally closed it here. All right, that's why I closed it. The major resistance that I'm watching out for is this place. It's the exact point I am watching out for the market to come to. 2000. This was the previous area, 2,788. 2788. That's the main target that I expect the market to come to. All right. So if this market does not want to come to that place, all right. If this market doesn't want to go to that, come to this place, then it has to hold this place. The way it should hold it. You have to hold here. Then from here, you can now know what's up. Maybe wherever it is. But we are not just going to. This market cannot just change like this to becoming a downtrend, unless there is something. There's a fundamental that seems very. Maybe there is war. It was not planned. There is war. Maybe there is chaos. It's sudden chaos in the world. in one of these top countries like America today, or Britain today. You understand? So that's only chaos that could be the reason why market sudden unplanned events that be the reason why market will just come in like have a U-turn like that. So this place now, you can see the market has pulled back a bit. It has pulled back already. Then continuation to the upside is what we have said. Like I said, this is the main point we expect the market to come back to. All right. So this is where we are expecting the price of the market to come to. Then from this place, we'll be thinking of, and from this place, we'll not know whether we'll continue further to the upside or we're going to break it back to the downside. But firstly, this is the major area we're expecting the market to come to. So right now, what have I done? I've closed my trades here. The one I entered here, the one I entered here, I entered some, I closed some here, I closed some here, I entered some here again, I closed some here, I entered here again, I closed some here, around here. So this morning again, this one that I entered here, I eventually closed it here because this place is a level. The market can decide to have a pullback towards this region. I actually had two areas that I expected the market to pull back to earlier. So I expected this market to first of all get here. That if this place is not sustained, it should come back here. Then eventually it got here. Upon getting here, then it gave a setup. My entry setup happened here. So that's why I had to make my entry somewhere here. And now the market is ongoing. So right now I expect the market to get to, if you draw Fibonacci from here now, okay. Now I expect the market to get to as high as let me say 2742. You understand? 2742 around this place. 2740. So round figure 2740. That's why I expect the market to jump to. Okay. For first TP, I entered two positions though. Two positions. I'll be closing first one here, then the second one, the last one will be here. You understand? So whatever happens here will determine whether we'll continue to trade the market to the upside until we get to as high as maybe 28 something or 2900. You understand? 28 something or 2900. So from there we will determine whether we'll continue from this place. So but for now, I have made a continuation entry. I call it continuation entry. Yes, continuation entry. I've made a continuation entry from here already. So I expect it. I don't know. Forex market is a business of probabilities. Okay, that's why they say when you are trading, think probabilities. Don't say it has to go. It's a must. It has to go. No, you're not the market maker. There are market makers in this business. So your account size, the lot size you open can't even give a peep. 1/4 peep you cannot give it. So now you just have to think of probability. So that's the way guys who actually make more in this business. That's what helped them. That's what helped them, actually helped them. So as a trader, it's important you think probabilities. You think what if it doesn't go. That's why your risk management has to really be in place. You need to secure your capital. Know what you're risking at every point in time, what you're trading and what you are risking, what you are willing to lose. Make sure it's something that can't affect you psychologically and emotionally. Because by the time you are affected psychologically and emotionally, you will just end up taking trades that you're not meant to trade. And at the end of the day, to be as if the market is against only you. So then you blow off your account. After blowing your account, you now go back to your bed, you sleep, you cry. All these things is what I have experienced in the past. So I enjoin you to relax, always relax, always relax. It's not an easy thing. It's a discipline. If you can discipline yourself in this business, there's nothing you cannot discipline yourself on anymore in life. Okay, forex market will teach you how to be disciplined, how to stay focused on what you want to do, on stay glued so much to your plan. So it's important that you really learn that craft of discipline. It's important. You cannot be someone who doesn't discipline himself or herself and want to be a trader. No, it doesn't work like that. So that's just all about it, guys. So I've told you already, the market, I don't know, this is where I envisaged the market to come to. I only have I'm only telling you based on this technical analysis that I've been using for years, that I've actually mastered, and I've been able, and special grace, it has been able to fetch me something, yes, which you see today. Go and watch my past videos. You would know that my analysis usually all end up coming up happening the way it is said. So right now I expect this thing to get back to this place, to get up to this place. So yes, it's a game of probability. So I am 70% and 80% sure that this thing would get here. So the remaining percent is for market eventualities. So thank you very much. Do well to subscribe, do well to like, and do well to share. Thank you, thank you, thank you, thank you.